Good evening. Welcome to Resource PNG. Tonight we discuss mine closure and we speak to St. Barbara. But first we speak to an internationally recognized mine closure expert, Mr. Hugh Jones, who has been actively involved in mine closure matters for 20 years, both as a regulator and a consultant. As a senior regulator, he oversaw the development of the government guidelines on closure of mines and tailings storage facilities. As a consultant, he developed numerous costed closure plans for iron ore, gold and nickel operations in Australia and the Pacific, and has undertaken risk assessments of closure plans for coal operations. We now join Anya Geno with this interview.
I have with me Hugh Jones, a world expert on mine closure. Hugh, welcome to the show.
Thank you.
Hugh, why do mines close?
Basically, eventually every mine runs out of economic resources, and therefore the fate of every mine that ever opens in the world is that one day it will run out of resources and close.
Now, Hugh, you yourself have been personally affected by mine closures. What is your personal experience with mine closure?
Yes, I was directly affected, as was my extended family, by the closure of 256 coal mines in South Wales in the late 1950s through to the early 1970s. The effect on that and our family was dramatic. In my own personal case, I was faced with the choice of either remaining in the industry and moving somewhere else in the world, or else changing my job. We decided that I would stay in the mining industry. So my family and I moved 12,000 miles to Australia, which was the only place in the world I could get a job in 1969. My cousins, one of them moved to Canada to take up a position there. Another one went to Zimbabwe. A third went to the Middle East for 5 years and then moved back to the UK. Two other cousins ended up changing their lifestyle and their jobs so that they could get work. And one cousin never worked again in the rest of his life. He lived on the welfare system. So yes, personally, it has hit me. It has caused me great upset, and yet I've survived.
But far-reaching impact by the sound of it.
Very far-reaching impact. The village that I lived in was a small village of around 2,000 people, and 30% of the people living in that village worked in the mine.
Goodness.
When the mine closed, we suddenly had an unemployment level of 30%. 3 of the 4 pubs in the village closed. All the shops in the village closed, and we then had to go and drive down to the next community about 10 miles away. And the community now, 45 years later, is about 70% the size it used to be, and no one works in the village. They all work somewhere else. So it becomes a dormitory community because there is no employment after the mine closed.
We'll touch more on impact a little bit later, but how do you manage mine closure?
Hopefully from the very beginning of the concept of the mine. That's becoming the modern approach. It certainly wasn't the approach 30, 40 years ago, but it's becoming much more now. So you actually look at the mine and you try to consider what it's going to look like when you finally extracted all the resource. And you make decisions about how the physical properties around the mine, the tailings facility, the waste dumps, the actual pit itself, if it's an open pit mine, where you're going to put your process plant. You make those decisions now so that come closure time, you cause the least upset and the least cost. It's very expensive to close down a mine if you've got no cash flow coming in and you have a lot of work to do. So it's much better to think ahead and plan ahead, and that's what seems to be happening much more in the industry.
Right. So let's go back to the social issues that arise surrounding mine closure. What are they, and how can we best handle them?
Well, for example, Ford has announced they're going to close down their Geelong factory in Melbourne in about 18 months. But the factory will still be there. And some other manufacturer can move into that factory and start producing something other than motor cars. So there's going to be some continuity. The infrastructure established around there is going to be used again. In the case of a mine, when you've depleted all the material you want, you've extracted all the available material, there's no alternative user to come in and employ anything like the same number of people in that place. You may get some small tourist activity and so on, but on a major scale, there is nobody going to replace the thousands of employees that the mine used to have. So that's a major social impact. What do you do with people when the mine closes? Now, traditionally, I'm going back 130 years or so, in Western Australia, the gold fields started up in Halls Creek, and they progressively worked down Australia, all down the coast. And the houses were wooden houses, and they were built so that there was a central corridor down the side, and they split them in half, and they put them on the ox carts, and towed them from one community to the other. It took several months to do that, but as the gold industry progressed, so the town followed them. We don't have that option today. You can't physically pick up brick and tile houses and cart them to the next location. So it's a big challenge. From a strictly, purely social aspect of mine closure, fly-in, fly-out operations are much more socially manageable, because Dad still goes to the same airport. The fact that he flies to a different mine site doesn't matter too much, because the kids have got continuity in schooling and social aspects and so on. It's not everybody's approach to life, but in terms of closure, I can assure you that the trauma of actually having to see your family disintegrate and leave your community because the mine is closed, that's traumatic. It would have been much easier if we could have simply got on a different plane.
More of this interview after the break. Welcome back. Picking up from where we left off in our interview with Hugh Jones, world mine expert, we further discussed the social aspects of mine closure.
About all the displaced people. Here in PNG, for instance, we have lots of landowner participation. Most of those mines are located in the remote rural areas where you have villages and you've livelihood from the rivers that surround the mines. What's your advice on managing that? It's
a very difficult thing to manage. The social aspects of mine closure is the aspect that has not been rigorously pursued. We've done a lot of work on the physical aspects of mine closure, done a lot of work on the biological and ecological aspects of mine closure, but the social aspects have been allowed to look after themselves, if that's the correct phrase to use, and it's an extremely difficult challenge. Particularly when you work in an area which is a developing country and the people were subsistence people prior to the mine coming. You bring the mine in, you teach them to live in a cash economy, they become used to living in a cash economy, and then one day the mine closes. You can't expect them to go back to being subsistence people.
No.
So we need to be able to replace that by something, and it's a serious challenge, which is why I say the fly-in, fly-out option from a social closure perspective has some attractions.
So how do you get something sustainable going from a closed mine?
Well, sustainability is a difficult thing. Some people believe that sustainability means that nothing ever changes again. But in practice, Mother Nature is not like that. It's a dynamic process. So what you try to do is to, first of all, stabilize all the physical aspects, the waste dumps and the tailings facilities and the open pits and so on. You try to get them to be stable so that they are not going to be catastrophic failures. Then you try to re-establish some ecosystem on that's a self-sustaining ecosystem. It's going to be dynamic. You start off with pioneer plant species and finally you end up with mature plants. That might take 50, 80, 100 years, depending on where you happen to be and the ecology that you're trying to establish. But you can do all of those things, and what you end up with is a land that is no longer capable of doing what it used to do before the mine was there. But it's not all darkness and gloom. It is actually a surviving ecological setup that is functioning in its own right.
So perhaps forward planning.
Oh, that's the key to everything. Yesterday when I was at the seminar, I was saying that you actually need to start planning for closure as soon as you realize you have a project. And I'm glad to say more and more mining companies are adopting that approach. There are some that we might call recalcitrant, but I'm sure peer pressure will come to bear on them. At least I sincerely hope it does.
Can you draw any comparisons between the Welsh or the Australian experience with the PNG experience?
Not really, because when you looked at what happened in South Wales, as I said, 256 mines closed in about a 15-year period. But there was a well-established social welfare system. And so that supported people while they got reorganized and resorted their lives. As I said, 4 of us left. So we weren't a drain on the public purse. But there was this buffer that allowed people to reorientate and get themselves organized. I don't see that parallel in many other countries in the world.
Hugh Jones, thank you for your time today.
Thank you for the opportunity to talk to you.
Hugh Jones, an expert in mine closure.
St. Barbara, that's coming up next. You're with Resource PNG. We now join Ross Kennedy, Executive General Manager, Corporate Services, St. Barbara.
I have with me Ross Kennedy, Executive General Manager, Corporate Services, St. Barbara. Welcome to the show, Ross.
Thank you very much. Thank you for having me.
Ross, St. Barbara has invested in a new oxidation plant. How will that improve production?
It'll improve production in a number of ways. That in particular, the centrepiece is a new SAG mill, which will increase our throughput capacity from 2 million tonnes per annum to 3.5 million tonnes per annum. It's also more modern, more efficient, and environmentally a lot more friendly as well.
So it'll have a very positive impact on your operations.
Look, we expect so, and the increase in throughput of itself will significantly reduce the unit cost of production. And that's a necessary step we need to take to ensure the viability of the operations.
Okay. Now, the gold price hasn't been favourable.
No.
What have you put in place to counter that?
We're tackling this on a number of different levels. The data is the gold price has fallen 30% in US dollar terms in 12 months, which is the largest percentage fall in a 12-month period since the 1980s, which is a long time ago.
Yes.
But the steps we're taking are, and we have to react to it, is firstly we're looking at reducing costs by improving productivity. Regrettably, we did need to reduce our workforce as part of that cost reduction program. We've also taken the step of locking in our forward sale price through to September next year at Australian dollars 1390, which will just take the gold price risk pressure off our operations during a critical period when we're turning around performance.
Any ideas when that might change, when the gold price might look a little bit more favourable?
Oh, we don't hold ourselves out as being specialists in forecasting the gold price, but there seems to us to be a disconnect with continuing strong demand for physical gold, particularly in the Middle East, China, developing countries, both retail, central bank buying, and in India we're seeing volumes picking up there again through importing jewellery since the government introduced a tax on importing gold bullion.
Right.
So physical demand is strong, but all the trends I read show that US gold continues to remain weak. And the 3 key words that seem to be driving investor sentiment are quantitative easing and tapering. And in my view, financial markets are very focused on short-term language from the Federal Reserve Chairman on these topics. But the risk, I think, is to the downside in the short term.
Now, is that one of the key factors why the project didn't meet expectations and why you've had to lay off over 100 people?
There's a number of factors. It's not just gold price related. And as I mentioned, we've taken some steps to manage that gold price risk by locking in a price going forward. We did a detailed productivity review using consultants who are very experienced in Melanesian environments as to what sort of levels of workforce is required for particular tasks. and they identified a range of productivity and efficiency improvements. And because we've been operating at a loss, it's quite essential that we take necessary steps to rapidly improve performance. So it's really with a view to the future, not so much to the past.
So St Barbara actually actively helping to outplace these people or assist them in any way?
We've gone beyond our statutory requirements in terms of benefits that we've paid to people. When our project the new project is commissioned fully, and we can increase production up to 3.5 million tonnes per annum, we expect we'll be able to re-employ approximately 60 to 65 people.
Right.
So very keen to remain connected, especially with the local community.
We'll be back with more of this interview after the break. Thanks for staying with us. We continue our interview with Ross Kennedy, Executive General Manager, Corporate Services, St Barbara.
Simberi represents 42% of St Barbara's assets here. How does this factor in attracting investment for, well, capex and exploration?
Look, it's an interesting perspective. Simberi does have 42% of our ore reserves, and ore reserves, of course, are the lifeblood of any gold company.
Yes.
We allocate exploration funding according to prospectivity and risk. So we rank each particular drilling target relative to others. And in this way we try and allocate funding as efficiently as we can. And as we do more drilling, various projects shift in ranking. Some will come up, some will come down. But by constantly reviewing the prospectivity, risk and potential economic value of our various targets, we keep the exploration spending quite disciplined. And I'm very pleased to say that Simberi exploration prospectivity is high. In fact, we have more targets to drill than what I think our budget can deal with this year. So prioritising them is important. And on nearby Tatau Island, which is only 5 kilometres to the south, we've had some very encouraging long intersections with good grade. It's too early to draw conclusions, but we'll certainly be following up on that. But in the short term, while many companies are cutting back exploration, we see that good exploration results will enhance project economics in the near to medium term. So most of our drilling is near mine, and if we find a higher grade or a better quality deposit, we can accelerate bringing that deposit into production to improve the project economics.
So some positive outlooks there.
Definitely. Our view of Simberi today is more positive than it's ever been in terms of the quality of the asset and its significant potential.
Community relations is something that's very important to St Barbara. How have your corporate social responsibility policies benefited the provinces in which you're working, particularly the New Islands province?
It is a really critical issue, and we think of our operations needing to be underpinned by a licence to operate. It's not a piece of paper, it's a foundation of respect and communication and trust with the local communities, because we are guests of the landowners on their land. We're also citizens of Papua New Guinea through our corporate business.
Yes.
We're learning, we're not where we would like to be yet, but we're very engaged with the Governor of New Island Province, Sir Julius Chan, and we very much appreciate his guidance and thinking on a range of issues. We recently contributed funds towards maintaining and upgrading a key road link between part of New Island Province. We have an active community relations team with more than 20 people, and we're working at the moment on relocating a church and housing for a particular village. And in the longer term, issues of education, health are very important in our thinking.
Yes.
But we're learning, it's work in progress, and we very much appreciate the partnership approach that the local community leaders are bringing to our work.
Thank you for your time, Ross.
Well, thank you very much for the opportunity. We're very keen to build a long-term operation here, and I appreciate the opportunity to meet with yourself and your viewers.
You're welcome.
Thank you.
Ross Kennedy, Executive General Manager, Corporate Services, St Barbara.
More of the show when we come back. Welcome back to Resource PNG. We now take a look at this report that highlights St Barbara's presence and operations in PNG. St Barbara's story in Papua New Guinea begins on the 7th of September 2013, when the company acquired the Simberi Gold Operations. With this acquisition of Simberi Gold Operations, St Barbara added to its gold operations in the Australasian and Western Pacific a third gold operator. Simberi Gold Operations had been very mindful of boosting productions and at the same time controlling the costs of production. As part of its increased production and controlled costs strategy, St Barbara brought in external resources for boosting productions, and the company had to downsize its workforce in response to the falling gold prices, thus effectively lowering costs of production. However, the company also stands by its decision to re-employ some of the workers when the market conditions improve.
Simberi is located on Simberi Island, which is one of 3 islands in the Tabar Island group in New Ireland Province, located to the north of the mainland. Simberi's been producing gold for approximately 4 years now and has strong support from the local landowners and the local communities. Critical to lifting our gold production, though, is the commissioning of an oxide plant expansion, which will take throughput rates from 2 million tonnes per annum to 3.5 million tonnes per annum. And I'm pleased to advise that the commissioning of this new plant is progressing very well. We've brought in external resources to boost our operating capabilities at Simberi and to also help respond to a lower gold price environment. Unfortunately, we needed to take the firm decision of reducing the workforce last month, but as the project ramps up again, we plan to re-employ some of those numbers.
In increasing production Simberi Gold Operations, according to Ross Kennedy, the company had to take key decisive but strategic decisions or measures.
The mining fleet has been expanded. The aerial rope conveyor, which is used to transport the ore from a number of open pits down the hill to the processing plant, can easily handle the increased mining volumes. All the ore is sourced from open pits, which are quite close by. And although the Simberi turnaround in performance is taking longer than we expected, we still expect to achieve a steady state production in the order of 90 to 100,000 ounces per annum, and to be producing at that rate by the end of this financial year. The resource upside potential is significant, and we're currently continuing to drill to identify additional oxide resources to potentially expand the existing mine life.
According to Ross Kennedy, there has been a significant fall in the price of gold. However, this is slowly picking up again, driven by the demand for gold by countries of the Middle East, China and in India, where the demand for jewellery seems to be picking up.
We note there's strong physical demand for gold in the Middle East, China. In India, there's purchases of jewellery, they're going up again, central banks as well as other developing countries. But the financial markets remain focused on 3 words: quantitative easing and tapering. And I think the markets are short-term in their outlook, but will continue to be heavily influenced by the Federal Reserve in the US. We can't control the gold price directly, but we have taken out forward contracts to lock in a gold price of $1,390 per ounce Australian through to the end of September next year. And by mitigating the gold price risk allows us to complete the turnaround activities on a timely basis.
Since St Barbara acquired the Simberi Gold Operations and Gold Ridge in the Solomon Islands, its ore reserves have also been increased significantly through these acquisitions. Simberi represents 42% of this ore reserve, but this figure can expand further. According to Ross Kennedy, despite the falling gold prices and cash flows are tighter, St Barbara is making a conscious decision to further increase its explorations based on strategic reasons. Furthermore, drilling results have also shown that Simberi gold operations' future seems to be bright.
From a whole of St Barbara point of view, our acquisition last year of Simberi and Gold Ridge in the Solomon Islands increased our ore reserve position significantly. St Barbara today has the largest ore reserves of any mid-tier Australian gold producer. And as you can see from the diagram, Simberi represents 42% of our total reserves, and we can see that that could well extend further. Although the gold price has fallen and cash flows are tighter, St Barbara is making a very conscious decision to continue its exploration spending, and this is for a very strategic reason, that we see high quality targets close by each of our mining operations, and the drilling has the potential to significantly improve the quality of near mine resources. Now, exploration funding, though, still competes between the various exploration projects for a considered view on which project will give us the best returns.
The encouraging drilling results have also generated substantial investors' confidence in the Simberi gold operations. Furthermore, these promising results have also encouraged increasing spending for operation expansion. In terms of safety and community projects, the mine has prioritised these areas and remains committed to delivering on them.
And our recent drilling results have been very encouraging, including 14 metres at 5.9 grams per tonne from the surface and 65 metres at 0.8 grams per tonne from only 9 metres below the surface. On Tatau Island, which is only 5 kilometres to the south, we also have some very encouraging results, including 6 metres at 3.5 grams per tonne and 7 metres at 2.2. Substantial shareholder funds have been invested into Simberi, and this is because we have a long-term view of the quality of the asset. And all our drilling and work to date has enhanced our view of the quality of the asset. As shown on the slide, we've invested over 100 million kina in the oxide expansion project and various other capital projects. The bulk of this money has been on the new oxide plant expansion, which not only increases throughput, but significantly improves the quality of our tailings discharge and our water usage. And we think both of these are particularly important. So while, for example, our throughput rate goes up by 75%, our increase in water consumption only goes up by 16%. Our planned capital expenditure is ongoing. This year we expect to spend a further $40 to $50 million. We have an active capital management program to support the increase in our production profile. We're also very pleased that Simberi has only had one recordable injury in the last 12 months. And our investments not only in production, but in people development, safety, environment, and community projects.
In terms of employment, Simberi Gold operations towards the end of 2013 employed a workforce of 535 people. The mine continues to develop the capacity of its workers with the aim of creating a skilled workforce who will also have the chance at working with other St Barbara-operated gold mines overseas. Furthermore, the Simberi Gold operations also remains committed to its community obligations, which is significant in building an excellent community relationship with the Simberi landowners and the New Ireland provincial government.
Simberi currently employs 535 people, and we're continuing to invest in development and training programs. And we see a particular opportunity and need to develop experienced supervisors and foremen. We're also very pleased to note that at our Gold Ridge operations in the Solomon Islands, we have a number of important positions filled by PNG nationals. I think one of the benefits that a diversified group like St Barbara can offer is the opportunities for our workforce to travel between the various countries and gain multinational experience. Community relations is the key to our licence to operate, which we take very seriously. We are guests of the people of New Ireland Province and Simberi in particular. We are also a citizen of Papua New Guinea. We will continue to spend significant amounts of money on infrastructure and community projects. We are continuing to learn.
According to Ross Kennedy, shareholders in St Barbara are some of the largest gold fund investors in the world. These shareholders continue to support St Barbara's new gold operations. In terms of compliance, St Barbara continues to improve and also continues to invest in infrastructure in its many operated gold mines. The company also continues to embrace continuous improvement.
The company shareholders in St Barbara include some of the largest gold fund investors in the world, and they see St Barbara and Simberi as a window into Papua New Guinea. Two of our largest shareholders each control over $1 trillion in funds, and they're very supportive of our activities, notwithstanding the lower gold price, to continue to develop our projects. St Barbara conforms to international standards, including anti-bribery and anti-corruption laws, and it's very gratifying the way in which our workforce has adopted this. Our compliance systems have been improved, and we will make sure that we continue to conform to our obligations to the government and the people. We have some genuine strengths to build on. Our local workforce are particularly enthusiastic to learn and develop new skills. We have improving infrastructure and see telecommunications as a pathway for lifting technology, productivity, and the capability of our people. We find in Papua New Guinea accessibility to key decision makers is excellent, and this is not always the case in other jurisdictions where we work. The quality of the operation has already improved quite significantly. It still has a way to go, but we will get there. There are risks to be managed as well. Simberi is a relatively high rainfall environment. At our Leonora operation in Western Australia, rainfall is a rare event to be celebrated. At Simberi we have 5 metres of celebration every year. Permitting processes can be worked through direct engagement, as I mentioned earlier. It can take longer than expected, and we acknowledge we have more to learn in this regard, and we encourage the development taking place in the regulatory environment. The costs of production remain high. In our September quarter, the cost of production was $1,900 per ounce. The average gold price we received in Australian dollar terms was $1,400 an ounce. So clearly that's not sustainable. But the key to lowering costs is lifting production, and our new oxide expansion project will deliver that.
Furthermore, according to Ross Kennedy, St Barbara's key objective is for the company to produce 235 to 255,000 ounces of gold a year. The company's focus is to continue to improve reliability of assets and to continue to derive improvement in the performance of its operated gold mines.
Finally, in terms of our key objectives, based on our Australian production, we expect to produce between 235 and 255,000 ounces of gold a year. And with both of our Pacific operations as well, we expect a group production profile in excess of 400,000 ounces of gold per annum. Our focus is to continue to improve the reliability of our assets and to continue to derive improvement in the performance across the group. Completing the turnaround in our Pacific operations is our highest priority this year, and we believe the investment community can monitor our progress based on our reported results.
St Barbara continues to invest significantly, but not indefinitely, in Simberi to build a long-term profitable gold operation. Furthermore, the company sees a tremendous exploration potential throughout the region. And despite the company's slow pickup in its Simberi gold operations, thanks to investors who, even though expect a high rate of return through their investments, have remained patient throughout, given their confidence in the promising Simberi drilling results. Resource PNG continues when we return. You're with Resource PNG. In this segment, we feature a report on the Extractive Industry Transparency Initiative, EITI, that PNG had entered into in March this year. Every year, approximately $3 trillion in mineral, oil and gas resources are exported worldwide. Revenues from these sectors have the potential to transform economies for the better in PNG and every country engaged in the extraction of natural resources. Used smartly and efficiently, they can catalyze economic development, spur growth and reduce poverty. Yet, too often this vast potential goes unrealized. In some cases, particularly where good governance is lacking, resource revenues may be lost to corruption, graft or plain mismanagement. In other cases, funds owed to the government are not collected, starving governments of a much-needed source of financing for development. In still others, secret payments and a lack of clarity around who benefits from resource extraction breeds mistrust between communities, governments and companies, generating unstable business environments, threatening the security of supply and even, in extreme cases, contributing to violent conflict. The Extractive Industries Transparency Initiative, or EITI, is a global initiative that ensures more transparency around countries' oil, gas and mineral resources. It is developed and overseen by a coalition of governments, companies and civil society. Papua New Guinea, a country heavily drawn into the extractive sector, has recently sought admission into EITI.
EITI is a global initiative. It was established a few years ago. It came out of the process which is Publish What You Pay, which is part of a global movement to improve transparency of all accounts, public accounts, and including transactions going on between extractive industries and resource projects and the government. And EITI, as I say, it was initiated several years ago, and it's a mechanism. It's not trying to deal with all issues of public accountability. It's just trying to deal with extractive industries, and obviously is particularly important for countries like Papua New Guinea, which are particularly dependent on the major extractive industries, particularly gold, copper, oil, and in the future gas in the form of liquefied natural gas. So this is basically a mechanism so that the extractive industries reveal the information, the income that they're receiving and how much they are transferring to the government. So the government then reveals how much they're receiving, and the two figures are meant to be the same. So it's designed to ensure that funds do not go missing between what the companies state that they pay and what the government revenue figures state that they receive, but to make sure that they're consistent, because this is a problem in many countries. Large sums of money are paid for in terms of taxes and royalties and other transfers that go from extractive industries, and yet then the governments in many of these countries show a very different figure. and where has that money gone missing? And sometimes it's gone into building nice palaces for presidents and so on. So this is designed to improve the public accountability with respect to the extractive industries, and it's to establish a global baseline and standard, and so that companies are able to go into a country like Papua New Guinea and say, hey, look, we are honestly recording our transfers to the government, and we're being responsible, and they then can report on that responsibility back home to their home countries and as well. So it's a global standard. It's particularly around the world being used for the oil, the mining and the petroleum industries. But in some countries, such as Liberia, where forestry is a major form of revenue for the country, Liberia has included forestry, log exports, and agriculture as well. So
Furthermore, according to Paul Barker, EITI over the years since its inception has further broadened its focus to include domestic transfers, such as transactions to subnational levels. Obviously, in all of this, EITI is not trying to cover everything.
And as the years have gone by, the EITI has changed its standards as well to extend to other functions, including responsibilities with respect to domestic transfers. So this is going to be involving payments that are received not just to the national government of Papua New Guinea, but also to the subnational governments, to provincial governments and so on. Obviously, it's not trying to cover everything. It's not trying to replace the government's own social contract with its own population and its own responsibilities for reporting its overall revenue and how it spends that money. So that includes obviously the transfers to the provinces, to all the government departments, how much it's spending on health, education and so on. That's incorporated within the national budget, but it's also meant to be recorded in the national accounts, which are annually recorded by the Auditor General. We know that there are a lot of problems there, but that's not the responsibility of the EITI. There are other mechanisms, global mechanisms, that are trying to address that, to assist countries and to help establish standards. There's a global accountability mechanism and global governance mechanism, which is being established, and it's a sort of parallel mechanism to assist with governance and accountability within countries. But EITI is really just a compact between the governments and the companies, but it also brings in civil society. So it's that three-way dialogue, government and the companies exchanging, sharing the information, the details of the transfers, civil society being involved as the third player, helping to represent the wider community and helping to make sure that the transparency is there between the other two key players.
In PNG, the Treasurer is the chairman of EITI. EITI was formally invited into the country by the Treasurer, who sought PNG's admission into this global initiative. PNG's admission application was accepted in March this year, and this effectively began a process of institutionalizing EITI in the country. Also with this admission, PNG's extractive industry is tasked to prepare a report to be submitted to EITI in 2 years' time. With the admission of PNG to EITI, many mining and petroleum companies in the country have also signed up to adhere to EITI standards.
The Treasurer chairs the process. He is, if you like, the patron. He's formally invited EITI and sought PNG's admission, and it has been its admission has been accepted, which is its application has been accepted in March of this year, and now we have 2 years in which to prepare the accounts ready for review by EITI, and there's a lot of work to be done in the meantime. But in terms of the participation, the major extractive industries have already signed up, companies like Exxon and Oil Search, Talisman and so on, Newcrest. These companies have all signed up from the corporate point of view, from the Barrick, Morribee Mining joint venture and so on.
The EITI standard contains the set of requirements that countries need to meet in order to be recognized as first an EITI candidate and ultimately an EITI compliant country. The standard is overseen by the International EITI Board, with members from governments, companies and civil society. PNG has begun an extensive groundwork in its bid to receive full acceptance on EITI. Over the course of time, extensive work needs to be done before PNG and its extractive industry will effectively come under the EITI radar. Furthermore, legislative arrangement is also needed to ensure that EITI does not collide with the Constitution.
There are the requirements of candidacy and then the requirements of subsequent acceptance. The EITI has accepted PNG's candidacy and that was accepted last month. And that required that PNG went through a series of processes, including establishing this representative multi-stakeholder group and management mechanisms, and made a commitment that it would honour the requirements of EITI. So there were extensive steps that we're undertaking, including extensive awareness workshops and a process of selection of the civil society membership. Clearly, over the course of time, there needs to be a lot more public awareness of EITI, including with landowners, because clearly that's a governance issue as well. It's there are issues to do with the landowner companies. Some entities are both effectively, government is also a producer, or it's a major shareholder in some government entities, and you've got landowner companies that are going to be receiving money, and there's issues related to governance and accountability with respect to those landowner companies. But major awareness is clearly going to be required of the public, and as I say, that over the course of time, between the candidacy having been approved and the acceptance, the full acceptance, there's this 2-year interval where we have to prepare. That is going to take a lot of work. It means that the government's accounts are going to have to be aligned. The companies have to reveal all their data on their financial data, which at the moment, when they make transfers to the government in taxation, the laws of PNG, as in most countries, taxation details are secret. Now, there will have to be modifications made because the companies are agreeing that the payments that they are making will be available, will be transparent and publicly available. So there will have to be probably some legislative arrangements or some parallel mechanisms which allow that data is made transparent.
Transparency can only lead to accountability if there is understanding of what the figures mean and public debate about how the country's resource wealth should be managed. Therefore, the EITI standard requires that EITI reports are comprehensible, actively promoted, and contribute to public debate.
All around the world now, there is more requirement for accountability in markets. You don't just see it with EITI. EITI relates to the extractive industries and the transfers there. But it also applies to in industries such as oil palm, where PNG is a leader in establishing the RSPO, the Roundtable for Sustainable Palm Oil, which also has accountability requirements, both standards to do with environmental, social standards, as well as financial performance. but also in other industries you get certified forestry, which requires that the standards that they know that the logs have been legally harvested right from the start, that taxes are being paid in the country, and that the product finally reaches its market, maybe in the United States, Europe or China or wherever, that it meets these standards. And then you've got standards that relate to fair trade, and you get standards related to organic. These increasingly, the global market is wanting to know that the products that they're buying are meeting certain standards, as well as the other sort of standards which are food quality and so on. And it relates, fisheries products and so on. So EITI is not trying to attempt to do everything. It is trying to improve the standards of accountability with respect to those extractive industries and the government and the subnational governments, and where there are transfers there. Clearly, it needs the public awareness, and EITI does make some assistance, and in fact some international bodies, including World Bank, are assisting in the provision of some finance to help with public awareness as well.
Natural resources such as oil, gas, metals and minerals belong to a country's citizens. Extraction of these resources can lead to economic growth and social development. However, when poorly managed, it has all too often led to corruption and even conflict. More openness around how a country manages its natural resource wealth is necessary to ensure that these resources can benefit all citizens. With the ITI's acceptance of PNG's candidacy and later full acceptance, there is hope that money generated from the exploitation of PNG's natural resources can now be better accounted for. Furthermore, with the public eye on the actual monetary figures the government is receiving from extractive companies, the greater the chance for the citizens of PNG to hold the government responsible on how it uses the money received from the extractive sector. That ends this edition of Resource PNG. If you have any comments or queries, do email us on this address, resourcepng@mtv.com.pg. Or to find out more, check MTV online, that's www.mtv.com.pg, and go to our Resource PNG page. Or you can check our page on Facebook. Until the same time next week, bye for now.